Okay, so you've seen the headlines, right? Gold prices are absolutely soaring. And everyone is asking the same question, why? Well, the real story here isn't what you might think. It's not the usual suspects on Wall Street. Nope. There's a much bigger, much quieter force at play, and we're going to pull back the curtain on it. Let's dive in. So, yeah, the $1 million, or I guess $1 trillion question is, why is this happening now? I mean, we've seen market scares and global tensions before, but this feels different. What's the secret ingredient this time that's lighting the fuse on this rocket? And look, if you're thinking it's just hedge funds or everyday investors making a panic buy, you're not seeing the whole picture. That's just the foam on top of the wave. The real power, the deep ocean current, is coming from a completely different set of players. And here they are, the world's central banks. Now, these are not your average investors, not by a long shot. They think in terms of decades, not quarters. They're making massive, strategic buys that are fundamentally reshaping the entire gold market. This isn't just a trend, it's a huge structural shift. Which brings us to a really important idea. Structural demand. Forget day trading and trying to time the market for a quick buck. This is the opposite of that. This is about national economic policy. It's about building a stable foundation that can weather any storm. This kind of buying creates a solid price floor for gold. So, who exactly are these titans? Well, the trend is pretty widespread, but there are a few countries that are really leading the pack. Their moves are so big, they're sending ripples across the entire globe. Let's open up the case files on 4 of them. First on our list is Poland. You know, it's one of Europe's most dynamic economies, and it has quietly become one of the most aggressive gold buyers out there. For them, this isn't just a casual investment, it's a core part of their national strategy. And just get a load of these numbers. Between 2023 and 2025, Poland's central bank snapped up 287 tons of gold. I mean, that is a huge statement buy. It's a clear signal to the world that they are serious about their economic strength and independence. And this is exactly why it matters so much. As analysts point out, when a country like Poland makes a move this bold, other nations sit up and take notice. It's basically a massive vote of confidence, reinforcing the idea that gold is, once again, a must-have strategic asset. Okay, let's move on to our next case file. India, a country that has a love for gold woven right into its cultural DNA. But this is about more than just tradition. Their central bank is making some very big moves of its own. Now, here's the interesting part with India. It's not just about the weight of the gold they're buying, it's the value. With prices surging, the value of India's gold reserves just blew past the $100 billion mark. That is a massive psychological threshold to cross. And that's the key takeaway right there. It's symbolic. This isn't just a number on a spreadsheet. It's a headline that grabs attention. For a country that already loves gold, seeing their central bank hold over $100 billion worth, well, that just reinforces the positive sentiment and signals that this demand is here to stay. Our third file brings us to Kazakhstan. Now, you might not see their individual purchases splashed across the front pages, but what they represent is just as important. They're a perfect window into a much wider global movement. And that is the crucial point. Think of Kazakhstan as part of a whole group of emerging economies that are all doing the same thing, consistently, quietly, adding gold to their vaults. They're all looking for a safe haven from things like dollar fluctuations and geopolitical drama. One purchase might not move the needle, but add them all together, suddenly you have a powerful, steady river of demand. And now, we get to the elephant in the room. The biggest player in this game, without a doubt, China. When the People's Bank of China makes a move, the entire world listens. And right now, they've been buying gold month after month after month. The scale here is just mind-boggling. Almost 2,300 tons of gold. Now, yeah, that's still a small fraction of their total reserves, but the sheer volume of their holdings and the fact that they just keep on buying makes them an absolutely dominant force. So with China, it's all about the strategic message. Every single ton they add is seen by the market as another deliberate step away from relying so heavily on the US dollar. It's a move towards a hard asset that can't be controlled by anyone else. And that belief in itself fuels even more confidence in gold. All right, so we've looked at the evidence from these 4 key countries. But now let's zoom out and connect the dots. Why does this central bank buying frenzy really matter? what does it mean for the future of money and the global economy? Well, it boils down to 4 huge reasons why this is a total game changer. First, like we said, this is structural demand, creating a real price floor, not just speculative hype. Second, it's a clear move away from the dollar, a trend people call de-dollarization. Third, when central banks buy, it's like the ultimate seal of approval for other investors. And finally, it creates this powerful feedback loop. As prices go up, their reserves are worth more, which strengthens their position and, well, encourages them to buy even more. And this slide really nails the difference. On one side, you have the wild, unpredictable roller coaster of speculative buying. It's all about short-term profit. And on the other, you have the slow and steady march of structural buying. It's strategic, it's policy-driven, and it provides real stability. This is a whole new era for gold. So, does this all add up to a new golden age, orchestrated by the world's most powerful financial institutions? It's a tempting idea, right? But before we get too carried away, it's really important to look at the complete picture. So let's keep a few things in mind. First, some of the huge value growth is just because the price of gold itself has shot up, not just new purchases. Second, official data can be tricky. Some countries report late or not at all. And finally, and this is a big one, the old guard, the US, Germany, the traditional top dogs of gold reserves, they're mostly sitting on the sidelines. The real action is coming from the world's rising economies. But even with all those caveats, the fundamental takeaway here is incredibly powerful. This rally isn't built on sand. It's being supported by something much, much stronger: the calculated, long-term decisions of nations that are searching for stability in a very unpredictable world. So what does this all mean for the future? We are literally watching the global financial order shift right before our eyes, with gold moving back to center stage. The next chapter hasn't been written yet, but one thing is for sure: the world is falling in love with this ancient metal all over again.